Hello traders, this is Blake Morrow with ForexAnalytix and you're listening to the week ahead video for December 15th, 2019. I hope you guys and gals are having a great weekend, getting ready for the last couple weeks of the year, celebrating and winding down a wonderful decade of trade. I'm excited to get into the new year personally. Well, before we go into this week's analysis, because we have a lot of stuff to talk about that happened last week, and obviously this next week is going to be our last really full week of trading before the Christmas holiday and the holiday season in general. I have to mention, if you haven't tried out ForexAnalytix, this is a perfect time to do so. It's $1 for 10 days. Try it out. And when you do that, it doesn't matter what pricing you know what package you want to be a part of, whether it's the premium service, which is $120 a month, which includes everything that we have, or if you want to do the light version, which includes pretty much everything minus the chat room and some of the advanced analysis. You will still get the mobile app, so download the mobile app, and you can do that at the Google Play Store or the Apple Store, either one. Make sure you download the mobile app because you'll have the mobile with both versions. But while you're trying out ForexAnalytix, you get the premium version regardless. So make sure you do all that. And so don't wait. Try it out, especially over the holidays, because this way you have some time to really sit back, read the analysis, see all the different features of ForexAnalytix. Okay, now that I got that out of the way, let's talk about, wow, what an epic week that we had in the FX market. It ended up with a bang. By the way, this is the data flash. I'm going to go ahead and move this out of the way just to get it out of the view. We had a huge week. It was a huge week in the market, and you know, fraught with volatility. One of the things that, well, actually, let's talk about a few of the things that happened, you know, this week. The UK elections. All right, so with the UK elections, the bottom line is that Boris Johnson got his majority pretty epically too, and you can see how the pound was really running up into the election. We got a spike up past resistance, and you know, the thing is, I didn't like the price action on Friday, frankly. And you know, I'm going to take you over to my charts. I got to show you really quick the 618 retracement of the, you know, this is the April high to the spike low, which, you know, created this little false breakdown. So we knew we were going to get a rally. Obviously, the bull flag pretty much completed, and we rallied above 130. I think we went to 135 and change, 135.08. The flag is almost complete, but you'll notice this 618 retracement right here. You know, it comes in at 134.56. We closed below it, well below it, and so I don't think that shorting the cable is necessarily a great trade right now, especially given the fact that we broke this multi-year trend line. You can see it right here. We broke that multi-year trend line. Dips back down to 132 should probably find buyers, and as ForexAnalytix, the analysis is written here, which was not written by me, but I agree with it wholeheartedly. As long as we're above the 130 level, the path of least resistance remains higher, which, you know, that's true. I think as long as we remain above 130, you're going to find buyers. The 130.15 level, actually, if you want to be specific. But I do believe that dips back down towards, you know, 132 should find buyers now. And you also have to keep in mind that the dollar actually showed some reversal tendencies on Friday. If you take a look at the dollar index, and you know, this is going to go along everything that we talked about, but that we're going to talk about. But look at the dollar index. We had this long-term channel. We actually had a double top. There's the neckline. We completed it below 97, so that double top was completed. We challenged the stops below this channel support and closed back above it. Now that's an inside candle. You can see it's an inside candle. So I'm not like convinced that the dollar is going to rally back to 100 from here. You know, not at all. Do I think the dollar can continue to recover early on this week? Sure. There is some data that's coming out this week that we're going to have to be aware of that could move the dollar. It's not dollar centric, but mostly euro centric. So we'll talk about that here in a few minutes. But that was one of the big events that happened last week was the UK elections, and now the path forward for the UK is going to be a withdrawal from the Eurozone. Boris Johnson looks like he wants to push up the timeline a little bit. We'll we'll see if that happens, but that looks to be what his intentions are. But January 30th is looks like the date that the UK will withdraw from the EU, and then from here on out, it's going to be years of putting together new agreements. So the pound is likely going to be a little bit more volatile. We're going to see it more sensitive to economic data, and it's going to be interesting to see how the central bank reacts now, because the Bank of England, had been very, you know, uh, 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 really not a factor over the last couple of years with Brexit, more or less standing on the sidelines. But now that we're going to see economic activity possibly start to pick up, you're going to see the Bank of England probably a little bit more active, and we're going to get better indications moving into next year as far as where they're looking with rates, whether it's going to be a continued softness in rates, or if inflation starts to pick up from consumer spending, will that create a little bit of inflation, maybe some upside pressure in rates? But that's neither here nor there right now. We're going to have to get past the end of the year and past the UK withdrawal from the EU. All right, the biggest event that happened was on Friday, the US-China Phase 1 deal being struck for all intents and purposes. Now, obviously, the market is a little lacking on details, especially as far as the agricultural purchases from China's side. But basically, the U.S. is canceling the October 15th and December 15th tariff threats, right? And cutting existing September 1st tariffs in half. So that's all going to be viewed as a positive. Now, the details, like I said, are lacking at this point, but the market's taking that in stride, and you can see the rally in the S&P going into into this last week. We rallied substantially. One of the things that I want to point out here with the S&P is you'll notice this continued rally in the highs, and relative strength continues to be divergent. Actually, there's another key development here in the S&P. Let me pull up my charts really quick. If you take this last move lower, this one in the summer, okay, so you got the high in at 30.20, right? This is roughly, so just bear with me. I didn't. I'm not matching the lows right to my prices, so just roundabout figures here. You'll notice the S&P, that drop, we hit 161% extension. You can see it right here. We basically touched it on Friday on new highs, and that was actually overnight. And then we have a little spinning top up here. Now, do I think that the stock market's ready to fall from here? It might pull back. I do think this moving into this resistance, whenever you move into the golden fib level, if you will, which is the 161% extension, the risk becomes pretty high that you that you have some sort of at least consolidation, if not a reversal around those levels. With the divergent relative strength, with the overbought nature of the S&P, and with the highly anticipated conclusion near term of the China-U.S. Phase 1 trade deal, I think the risks are elevated that we get some sort of consolidation around here, especially going into year end. Now the question will be, will funds try to mark up their portfolios going into year end, saying they're fully invested and continue to plow into ETFs and whatnot, or will you see some profit taking on some of these positions going into year end? It's to be seen. I just want to point out that there's pretty major technical resistance. However, this megaphone pattern, you can see this big megaphone pattern, that's been a huge everybody and their brothers, mothers, uncles, sisters, pet monkey had been looking at this big megaphone pattern going into this fall. Well, we're above it right now. So as long as we stay above, let's just say roughly 30.70, 30.75, somewhere in that neighborhood, as long as we stay above those levels, I don't see a material pullback in the S&P technically. Do I think that we could consolidate up here? Sure. Going into year end, absolutely. Could we continue to break out? Yes, we could. And we could get an accelerated run higher. And I think a move above 3,200 would be very, very bullish for the S&P from a momentum standpoint. But right now the momentum's kind of slowed down, as all of everything that happened last week was very highly anticipated. So let's just keep that in mind. Now that's the S&P, and another big development of last week was the USMCA completion. Now, speaking of which, I want to show you guys the US dollar Mexican peso. The US dollar Mexican peso, where is she? Yes, I called her she. She closed at 19. Okay, now that is, if you look on a weekly chart, that is below the big triangle support. I have some reservations with the US dollar Mexican peso. First of all, we dropped below 19 briefly. I don't think enough to trigger any stops, because it was like 19, it was like 18.98, somewhere around there was the lows. I don't think it broke far enough to trigger stops. It definitely still could, but the fact of the matter is, oh, I didn't mean to do that. The fact of the matter is that we closed, below this major trend line. I think if the US dollar Mexican peso firms up and we get back towards the 200-day moving average, which, by the way, the 200-day moving average is right here around 1925, 27-ish. If we get back above that 200-day moving average, I think a risk of a reversal higher in the US dollar Mexican peso would be high. Now, the reason why I point all this out is because there are a few indications or a few things that have got my attention about this current stock market rally that is concerning to me. I alluded to it on Twitter. If you follow me via Twitter, I am Pipzar on Twitter, for those of you that do not know. And it's amazing. I'm going up, I think I'm over 10 years of tweeting. So I've been doing that quite some time. Anyway, I alluded to it on Twitter on Friday. Some of the things that were not happening that you would expect to happen would be, first and foremost, the gold market. Okay, take a look at gold. Now, with all the great news that happened on Friday. Friday was like this epic, culmination of, oh my God, we got past Brexit. We're going to get past Brexit. Oh my God, we got past, the phase 1 China trade deal. The last asset class right now that should be higher would be precious metals. And gold did not sell off. That, to me, was like a head scratcher. Now, is that telling us anything right now? Not currently. However, as you're may not be aware, I've been following, and let me pull up gold really quick, and I'll just give you my view, just because it's pretty simply drawn. This is a pennant or a bull flag pattern, however you want to look at it. We stalled at a 38% retracement. It's been a very shallow pullback. Blah 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 blah. You've heard me say that 1,000 times already. But again, the question I have regarding gold is, well, why, aren't we down here at least, if not a lot lower, maybe even at the 200-day moving average? It's not saying that we can't get down there, but if for some reason going into next week, if you see gold trade above like 1490, 1500, that's gonna be one red flag to me that suggests that we might have reached a buy the rumor, sell the news in stocks. Now, how currencies are going to respond to that is a completely different story, which I'll talk about here in a moment. But that's I think one of the risks with the S&P is we had this big build up to this phase 1 Brexit USMCA, and now that it's all passed, do we get the buy the rumor, sell the news? I'm not convinced that that's going to happen, but if I see gold start to rally, that might suggest that that is going to take place. By the way, if gold goes higher, that also means that the yen is probably stronger. One of the other risks that I see in the FX market is why in God's name is the dollar yen not breaking out? We've been challenging this near 110 level, and with all this good news, you would think the yen would be substantially, weaker. It's not. We did, break higher on Thursday, Friday, but if the yen starts to roll over, it's probably more due to gold pushing higher. Another thing that has stuck out, again, I alluded to this via Twitter, so I'm gonna just show you the charts here, is the 10-year. Again, if the stock market was going to continue to rally, what we would see is a rally in yields. We would see a bond sell-off. We'd see, bonds coming down, yields rallying. Actually, we got the opposite on Friday. We got bonds rallying, yields coming down, and that was another head scratcher. I went out to lunch with a good, one of my best friends. I actually tweeted a picture of my friends and I. We went like late in the day. He happened to be in town for his holiday party, so he called me up, and I'm like, oh yeah, let's do lunch. Anyway, he's in the commercial real estate business, so we were talking rates and about how it's going to affect his business, and he goes, yes, shouldn't rates be flying? And I'm like, yeah, that was one of those things today, and I'm talking back on Friday. It's one of those things that I sat in front of my computer and said, okay, well, why didn't the bond market break down? Why didn't we break below 128 here in the 10-year? And why aren't yields rallying? Well, if bonds continue to bounce here and they continue to rally and we see yields come down, that's going to be another, question mark that I have in my mind about, is the stock market buy the rumor, sell the news type of situation. All right, so that's just things that I've been thinking about going into, this next week. Now, there's a couple charts that I think are important, and I think a lot of charts are important, but I'm gonna really go over these quickly. You can find the analysis here on ForexAnalytix as well. I want to be able to do a little bit of drawing. So on the euro dollar, big development here on the euro. We have an outside day chart. Big. Look at that long wick. All right. This, some people say it's a shooting star. It is a reversal candle, and the problem that we had here with the euro. See this false breakout? See this one right here? That little wick. Okay, that was also above the 200-day moving average. That was also above channel resistance. Do I think gold's a natural short back to 110? Well, maybe. I want to point out this big trend line here. It's dotted. You can see it's dotted. Okay, that support comes in right around 110.90 roughly, maybe in the 80s, depending on how low we can stretch it. As long as we're above that dotted trend line, and this is, you can see it was a triangle breakout here. Okay, previously you have to look intraday out for that, but as long as we're above this broken trend line, we might get a little bit of a bounce. So, and I don't know if I want to be outright bearish, back into this range, but it did post a false breakout above the 200-day moving average, above channel resistance, above horizontal resistance. That is significant. So, any rally should be capped, but I'd be kind of weary on how much downside is there in the euro this week, especially coming into all the holidays. The cable, again, we talked about this, but that 618 retracement, also a big deal. The Aussie dollar, 200-day moving average, we have an outside day bearish reversal. We broke out of this triangle and we closed right on triangle support. I think a lot of traders got pretty long the Aussie dollar in anticipation of the China-US trade, phase one deal coming to fruition, and we saw a pretty big reversal in the Aussie on Friday. So that's something else that I think that you should be looking at as far as the majors go. So again, there were just a couple of charts that I think that I wanted to raise some awareness. Now next week, really quick, we have we have some PMIs out of Europe. First thing Monday morning from Germany, from France. We have flash PMIs for the Eurozone. We have monetary policy meeting minutes Tuesday morning in Australia, which will be Monday night if you're in the U.S. like I am. Wednesday morning, ECB President Christine Lagarde, she speaks. We have UK inflation data. Like I said, I believe that the UK data is going to start to matter a little bit more. Maybe not so much next week, but going into 2020. We have Canadian CPI on Wednesday. We have New Zealand GDP Thursday morning if you're in New Zealand or in Asia. But if you're in the United States, it's going to be in the afternoon. And if you're in Europe, it's going to be late at night. We have Australian employment Thursday morning, or again Wednesday night if you're in the US. Monetary policy statement from Japan, from the BOJ, that comes also Thursday morning. Thursday early morning we have UK retail sales, and we have the Bank of England rate decision, which shouldn't move the market at all, because like I said, it's going to be going into next year that's going to be more important. Then on Friday, we have Canadian retail sales. So guys and gals, if you are watching via YouTube, you're watching this video and you found it useful going into this next week, make sure you give us a thumbs up. It makes myself, the rest of the team, feel really good about producing these videos each and every week. Share it with your other trader friends if you think it's going to be valuable to them. And make sure you subscribe to our channel so this way you don't miss any of our great interviews that Dale Pinkert, or aka Forex Stop Hunter, does throughout the course of the week. And guys, I hope you have a wonderful last full week of trading. The week ahead videos and the analysis is going to be a little bit pared back going into the end of the year as we approach the holiday season. But I'm really ready for 2020 to come in with a big bang. Hopefully volatility picks up. So guys and gals, have a great remainder of your day. My name is Blake Morrow with ForexAnalytix. Thank you very much for listening in. I will see you on the FACE webinar Monday morning. Thanks.